Welcome back to the AG Insider. This is Captain Silver, and this is an emergency weekend broadcast. While the traditional markets are closed, while Wall Street traders are at home enjoying their Saturday, the world has completely changed in the last 24 hours. A massive wave of 80 fighter jets just attacked Iran in a coordinated military strike. 42 naval ships have been destroyed in the escalating conflict in the Middle East. The Strait of Hormuz is now effectively a war zone with shipping completely halted. And when the bell rings on Monday morning, when the markets reopen, the financial system is going to experience a historic meltdown that most investors are completely unprepared for. The liquidity shock that is about to hit global markets is going to make every previous crash look like a minor correction. Oil is going to gap up to $100 a barrel instantly. Silver is going to disconnect from its fake paper price. And the people who spent this weekend sitting on their hands, hoping everything will be fine, are going to wake up Monday morning to a portfolio bloodbath. The suits want me to tell you this is not financial advice, and they are correct. This is not financial advice. This is an emergency weekend warning that you have less than 48 hours to position yourself before the Monday morning liquidity shock destroys unprepared investors. Let me know in the comments below right now because I need to know where this community stands going into Monday. Are you using this weekend to secure your physical assets? Are you calling your local coin shop? Are you placing orders online? Are you converting your cash into tangible hard assets that cannot be destroyed by a market crash? Or are you praying that your paper portfolio survives the Monday open? Are you hoping that your stocks and bonds and ETFs somehow avoid the carnage? Are you trusting that Wall Street is going to protect you when the liquidity crisis hits? Drop a comment right now. Tell me what you were doing this weekend, because your actions over the next 48 hours are going to determine whether you survive what is coming or whether you get financially destroyed. Now let me break down the brutal reality of this weekend's escalation and explain exactly why Monday morning is going to be a historic disaster for anyone holding paper assets. 80 fighter jets attacking Iran is not a skirmish. That is a full-scale military operation. 42 naval ships destroyed means the naval power in the Persian Gulf has been decimated. And the Strait of Hormuz, which is the choke point for 20% of the world's oil supply, is now practically closed due to the naval destruction in the ongoing military conflict. No shipping company is going to send tankers through a war zone where ships are being destroyed. Insurance companies are not going to cover vessels. The flow of oil through that strait has stopped. And traders already know this. Smart money is not waiting for Monday to react. They are already positioning. They are already signaling that crude oil will gap up to $100 a barrel immediately upon reopening, maybe higher. Because when you take 20% of global oil supply offline overnight, when you shut down the Strait of Hormuz, the price does not gradually rise. It gaps. It jumps. Let me give you some historical context so you understand how serious this is. In 1973, during the Arab oil embargo, oil prices quadrupled and stayed elevated for years. The entire global economy went into stagflation. Inflation ran at double digits. Economic growth stalled. Unemployment spiked. It took a decade for the economy to recover. And that was with oil going from $3 to $12. We are talking about oil potentially going from 90 to 150 or 200 if this conflict escalates further. The economic impact is going to be exponentially worse than the 1970s. And the 1970s destroyed the purchasing power of everyone holding cash and bonds. The only people who survived were the people who owned hard assets. Gold went from $35 an ounce to $800. Silver went from $1.50 to $50. Real estate appreciated. Commodities went vertical. But cash got destroyed. Bonds got destroyed. Anyone holding paper wealth watched it evaporate. And we are about to see the exact same thing happen again, except worse, because the debt levels today are exponentially higher than they were in the 70s. The United States has $38 trillion in national debt, 130% debt to GDP. The government cannot afford high interest rates because the interest payments would consume the entire federal budget. So the Federal Reserve is trapped. They cannot raise rates to fight the inflation that $100 oil is going to create. They're going to have to keep rates low and print money to keep the government solvent. And that means the inflation is going to spiral. Let me explain the mechanics of what is about to happen on Monday morning so you understand exactly why this is such a critical moment. When the Asian markets open on Sunday night, oil is going to start trading. And the first trade is not going to be at 91 or 92. The first trade is going to be at 100 or 110 because that is what the market thinks oil is worth now that the Strait of Hormuz is closed. That is called a gap. The market literally skips all the prices in between because there are no sellers willing to sell at 91 or 95 or 98. Everyone who wants to sell has already sold. The only people left are buyers who are willing to pay 100 to get into the market before it goes even higher. And when oil gaps to 100, that is going to trigger algorithmic trading systems all over the world. These are computers that are programmed to react to certain market conditions. And $100 oil is a condition that triggers a lot of algorithms. Algorithms that sell stocks because high oil prices are bad for corporate profits. Algorithms that buy commodities because inflation is accelerating. Algorithms that sell bonds because inflation erodes the value of fixed income. All of these systems are going to start firing at the same time. And that creates a cascade effect where selling triggers more selling and buying triggers more buying, and the markets become incredibly volatile. The stock market is probably going to open down 5 or 10% on Monday because of the oil shock. The Dow could lose 2,000 or 3,000 points in the first hour of trading. That is going to create panic. Retail investors are going to see their portfolios down 20 or 30% from the highs, and they are going to start selling. And that selling is going to push the market down even more. This is how crashes happen. This is how liquidity evaporates. And in that environment, the only safe assets are going to be physical hard assets that cannot be liquidated by a margin call or forced sale. Silver is going to react differently than stocks. Silver is a safe haven asset. Silver is what people buy when they are scared about inflation and currency debasement and geopolitical instability. So when the oil shock hits, when the stagflation panic accelerates, institutional money is going to start flowing into silver. But here is the problem. There is not enough physical silver to satisfy that demand. The COMEX vaults have 85 million ounces of registered deliverable silver, but there are 429 million ounces of paper claims on that silver. That is a 5-to-1 ratio. For every physical ounce, there are 5 paper claims. And when institutional investors start demanding physical delivery instead of cash settlement, the COMEX is going to run out of silver very quickly. And this is where the Shanghai situation becomes critically important. The Shanghai Gold Exchange has already lost 77% of its deliverable silver inventory. They have 15 days of supply left at the current withdrawal rate. When those vaults go to zero, when the largest physical delivery market in the world runs out of silver, the credibility of the entire paper. And this is why independent financial education is so important. This is why channels like this exist. Because the mainstream media is not going to tell you the truth. They are not going to explain that $100 oil means your cost of living is about to spike. They are not going to explain that stagflation means your paycheck buys less and less every month. They are not going to explain that the only way to protect yourself is to own hard assets that cannot be debased by central banks. If this channel's mission to protect the stacking community from the financial consequences of geopolitical war helps you see what is coming, if it helps you take action this weekend to secure your wealth before Monday's liquidity shock, then consider hitting that super thanks button below to support this work. This is how I fund the research and the analysis and the real-time market monitoring that allows me to bring you warnings like this before it is too late. Now, let me give you the action plan for this weekend because you have less than 48 hours to act, and every hour that passes is an hour where inventory is disappearing and dealers are getting closer to being sold out. The paper derivatives market is about to lose all credibility. When Monday hits and institutional panic sets in, when oil opens at 100 and the stagflation crisis is undeniable, the $82 spot price for silver is going to disconnect violently from the real cost of acquiring physical metal. The spot price might still show 85 or 90 on the screen. But dealers are going to be charging 120 or 150 for physical delivery, or they are going to be sold out completely. This weekend is the absolute final window to lock in physical silver at local coin shops or online dealers before the Monday liquidity shock wipes them out. Right now, today, Saturday, you can still call dealers and place orders. You can still find inventory. You can still get reasonable premiums. Most dealers are charging $6 to $10 over spot for popular products like American Silver Eagles or Canadian Maple Leafs. Some generic rounds might be 4 or 5 over spot. That means you are paying $87 to $92 all in for physical silver. But Monday morning when the panic hits, when everyone wakes up to $100 oil and realizes the stagflation crisis just went into overdrive, every investor who has been sitting on the sidelines is going to rush into physical metals at the same time. And there is not enough supply to satisfy that demand. Dealers are going to get flooded with orders. Their inventory is going to disappear in hours. And the dealers who still have metal are going to raise their premiums to reflect the new reality. Premiums could go to $20 or $30 or $50 over spot. Or dealers might just stop taking orders completely until they can secure new inventory, which could take weeks or months given that the supply chain is broken. So your window is right now. This weekend. Before Monday. You need to be making calls. You need to be placing orders. You need to be locking in inventory at current prices. Do not wait to see what happens Monday morning. Do not wait to see how big the oil gap is. Do not wait to see how the stock market reacts. Because by the time you have that information, by the time Monday morning comes and the carnage is visible, it will be too late. The dealers will already be sold out. The premiums will already be at levels that seem insane. And you will be stuck holding cash that is losing purchasing power by the hour. I will be live on the charts tracking the oil and silver gaps the exact second the Asian markets open on Sunday night. Asian markets open before U.S. markets. They are the early warning system for what Monday morning in America is going to look like. When oil starts trading in Asia Sunday night, when we see the gap, when we see how violent the repricing is, that tells us exactly what to expect when New York opens Monday morning. I am going to be monitoring the futures markets. I am going to be watching the currency markets. I'm going to be tracking how gold and silver react in Asian trading. And I'm going to be breaking it all down in real time so this community understands exactly what is happening and what it means for the Monday Open. Make sure you are subscribed to this channel with the bell notification turned on so you do not miss the opening bell carnage. When those gaps happen, when the liquidity shock hits, when the panic sets in, you need to know what is happening so you can make informed decisions about your remaining positions and your strategy going forward. I just posted your exact weekend checklist for securing hard assets before the banks open to my private insider community. This is a step-by-step guide for what to buy, where to buy it, how much to allocate, how to think about the Monday gap, and how to position for the stagflation acceleration that is coming. Click the join button to become an insider member right now. If you think this war is bad, you need to understand the terrifying countdown happening right now in China. Shanghai vaults are exactly 15 days away from running completely out of physical silver. You must click the video on your screen right now to see the exact math before Monday hits. Do not wait. Click right here, and I will see you in that video.